Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra. Well, gold prices have been cooling off steadily. In fact, they're down about 1,000 rupees per 10 grams in just 1 week. So, is it the right time for you to invest in this yellow metal? And what's the outlook on prices of gold and the returns that you can expect going forward? To understand all of these important questions and much more, joining in with me is a very special guest. Mr. Navneet Damani joins in. He's the Senior VP at Commodities Research at Motilal Oswal Financial Services. Thank you so much, Navneet, for taking the time out and welcome to Business Today TV. Well, Navneet, I wanted to first up understand from you that gold prices have been cooling off, and all the investors are now keen to understand if this is the right time to invest in gold, or should one wait? Will prices come off sooner? What's your view here?
Well, Sakshi, I believe that gold prices, I won't say have been cooling off, but they have been in a broad range for quite some time now. They have been struggling between 49,000, 49,500 and about 53, 54,000 on the higher side. And largely because what are the factors which were kind of a tailwind have now started to become headwinds. Now, let us take an example for the Russia-Ukraine war, which has been a drag for quite some time now. The risk premium in gold have started to fade off because of this factor, and that is already started to reflect on the prices. Also, the stance coming in from Federal Reserve, earlier they were chasing the people and pumping in money into the system to get the economies out of the woods and probably help them float through the COVID crisis. And today they are stuck up with too much liquidity and trying to, in the whole bargain of controlling inflation, they are raising rates. And we've seen multiple rate hike in 2022, and it doesn't stop the buck here. Over the next 6 months also, it is likely to continue. And these all factors are kind of having the upper hand at the moment, and that is why we see gold prices being under pressure. And now the question is, for how long is it going to continue, and should one be an investor into gold?
Yes.
So I believe that largely the run-up for gold in the last 2 years has played out, and for the next, say, 12 to 18 months, we are not very gung-ho about gold prices giving a handsome kind of returns. Of course, if the war escalates or if inflation becomes uncontrollable, that is a different story. But given the current backdrop, it looks like gold prices have played their part and could be giving you about 3-4% kind of returns from here on. And in best case, in the next 12 to 18 months, so you might even see some negative returns also. So I would be a little cautious at this point if I say that investors who want to buy gold could be a little patient, could wait for better levels, and I personally believe they could get better entry levels from here.
Okay, investors can hope to get better entry levels at this point in time. Have a little patience, because gold prices may actually give you more attractive levels going forward in case you're looking to invest in gold. So you said that about 3-4% of returns is what one can expect going forward in the medium to long term. What kind of targets do you have in mind for gold prices, say the year-end target or maybe FY23 target? What do you have in mind?
Well, for the last 2-3 years, we've been very bullish on gold, and from 38-39,000, we were chasing target for 54-55,000. I believe we've already met those targets, and from here on, our stance is a little cautious. Our approach is that maybe you might see 53-54 once again, but those prices are not likely to hold around, and eventually we will slide below 50,000 also, or on the COMEX front, maybe around 1,650-1,700 is where we see COMEX prices sliding towards. So we are not very positive, and say in best case, if you see a decent rally because of any macro backdrop change, that could be an opportunity where one could look to book some profits for already invested investors, and for fresh investors, maybe a sharp correction could be an opportunity.
Okay, but since you said that you don't expect very sharp returns on gold, despite that, I want to understand from you, because we've seen that stock markets have been going very volatile. In the first 6 months, it's been a roller coaster ride. So in comparison to all the other asset classes, do you still believe that FY22, FY23 will actually turn out to be an outperformance for gold vis-a-vis other assets? Do you believe that?
Well, vis-a-vis other assets, they've already corrected very sharply. But if you see year to date, for gold, we started the year on a very positive note, and we kind of retraced all the gains. So we are almost at zero as far as gold is concerned. For the end of the year, I'm not very sure that we would end around 48,000 or we'll end around 54,000. But there is a bright possibility that given the current backdrop where most of the risky assets are getting little riskier and the safe haven are being considered, gold could gain some traction. However, this story might turn around in the second or in the third or fourth quarter of 2022, and that is when we believe that the current returns will also fade off, and probably negative returns could start to kick in for gold.
Okay, perhaps difficult time going forward from here, not too aggressive targets right here coming in for gold going forward. But we've seen a lot of activity even in the digital space for gold. The first tranche of sovereign gold bonds for FY23 has opened for subscription. It is currently open as well. Should one invest in this gold bond scheme?
Well, gold bond scheme is a 8-year investment. It's not probably 200 rupees here or there will not make much of a difference for an investor who's got 8-year time horizon in mind. So of course, this is a very good investment proposition as far as this is concerned. But be very clear that you will not be able to exit this scheme intermediary. If you want to exit, you need to pay a discount of about 8 to 10% on the current prevailing price. So if you have that kind of horizon, it's a wonderful scheme. You get tax-free benefits. You get about 2.5% interest on your investment every year, and a decent lock-in period of about 8 years. And also for a retail investor, you get about 1% discount to the current prevailing price. So all this makes it a very interesting proposition, and one should be looking at it from an investment avenue. But bearing in mind that 8 years is a lifetime horizon that you need to invest.
Yeah, for long-term investors, it's a good idea. So basically, between physical gold, the sovereign gold bond scheme, and the other digital forms of gold, where would you currently advise investors to put in their money?
Well, the challenge with physical gold is once you invest in physical gold, you have making charge which could be in the range of 8% to 12%. So immediately after your purchase, you've lost about 8 to 10% of your capital. Mostly in case of jewelry that happens. In case of physical gold also, the making charge is roughly around 3%. That gives you about 3% negative return immediately after your purchase. But that's not the case with other digital assets or sovereign gold bond. And secondly, the storage cost, the storage value and all that for physical gold, of course, the purity question that all keeps on lingering, and that is making sovereign gold bond or digital gold bond an interesting proposition for the last 3-4 years. Now, talking about digital gold, there are various digital gold platforms which are available where you could live, and the most prevalent one among investors is the ETF. There are a lot of ETFs which are listed from HDFC, from Nippon to other avenues which are listed on the NSE and BSE platforms, and the annual fees is roughly around 0.4 to 0.6% of many of them. So if you are holding it 5 years, 10 years horizon, also the annual maintenance charges doesn't hit you or bites you too much. And given the current moment in gold prices, you could look to buy at every drip, every tranche, do an SIP, or probably you could look to trade also on this. If you get a lower price, you could look to enter, and probably at a higher price, you could look to exit also. That's all possible if you are a digital investor, but that's the challenge for a sovereign gold bond or a physical market participant. So that's why digital is the key theme for gold at this point in time.
Okay, digital is the key theme. But since you mentioned very, very interesting point that there is an annual fee, a lot of, investors are unaware of the kind of charges they have to incur when they invest in any form of gold, be it physical, the sovereign gold bonds, the other digital forms. Could you help us understand which is the cheapest mode of investing in gold currently?
Well, sovereign gold bond is the cheapest way of investing because there are no charges, there are no annual. In fact, it gives you about 2.5% every return every year, interest every year. But for digital gold, like an ETF, the charges varies from 0.4% to 0.6, 0.7%, depending on the investment scheme and company you've chosen for. For physical gold, as I mentioned you, the making charge varies from jeweler to jeweler, and say it could be roughly around 2% to 4% for coins and 8% to 12% for jewelry. So these are the kind of charges you incur investing in various mechanisms.
Okay. And lastly, Navneet, I have to ask you, a lot of times we discuss only about gold, but one must also keep in mind that silver prices have also been correcting along with gold. As an investment avenue between the two, commodities, gold and silver, for long-term investors, somebody looking to invest in gold, say for 5 or 10 odd years, of course, we've discussed the benefits of SGB, which is for 8 years holding. For those investors not really looking for a very liquidating form of investing in gold, but for long form, where would you really place your bets between gold and silver?
Well, between gold and silver, if you ask me for the next 2, 3, 4 years, my bet is on silver. And we've been running this theme from switching to yellow, from yellow to white. So that's why I feel that for the next 3, 4 years, silver is likely to act largely as an industrial metal as compared to a precious metal. And silver is a more naughtier one between the two precious metals, and gold kind of gives you about 5-7% stable returns every year or so. But silver kind of consolidates for years together, and it moves in a matter of few months and gives you about 30, 40, 50% kind of returns. And we've seen this happen time and again. So it happened in 2019-20, and I believe 21 was a consolidation year for precious metal. 22 it started on a sloppy note, has corrected about 15% from peak, and largely because of industrial metal correction, where most of the industrial metals have corrected about 25% from their peak. Silver has also been under pressure. I believe that there is a strong story which is playing out for silver, where a lot of switching from some of the industrial metal will happen for silver. This electric vehicle theme, 5G technology, solar panel theme, all this is likely to be very, very positive for silver prices. And as and when the economy start to improve once again, the chip shortage story kind of is done and dusted, then you will see a strong demand coming up for the silver prices. We are very confident that silver could be hitting towards 80,000 and 88,000 in the best case over the next 12 months. That's about 25% returns from year on. So my bet would be on silver as compared to gold. If one wants to invest, there are various mechanisms at this point to invest in silver also. There are some ETFs which have started. One could look to invest through those mechanisms, or could look to buy physical silver also, where charges are quite less as compared to buying physical gold. The bars, coins, and other various forms of silver are available for investments.
Okay, well, on that note, thank you so much, Navneet, for summing it all up very well for all our viewers looking to invest in bullion at this point in time between gold and silver. 3 key points that Navneet really mentioned here. One, investors looking to invest in gold can actually have some more patience. The prices may correct further, giving you attractive prices going forward from here too. Also, between physical and digital gold is going to be the theme. Sovereign gold bonds, the greatest and the cheapest method of or mode of investing in gold. And lastly, between gold and silver, it's going to be the white metal that will reign in the long term. Thank you so much, Navneet, for being with us and sharing all these insights.
If you like the video, do like, comment, share and subscribe.